Okay, and we are live. So, good morning, or good afternoon, or good evening, everyone. Thank you for joining us wherever in the world you're joining us from. We really appreciate you joining us for this very interesting and informative webinar on mandatory e-invoicing penalties around the world and how your company can avoid them. So if you've registered to watch this webinar, chances are your company is operating in a country that has mandatory e-invoicing regulations. So I'm sure you've noticed the steady rise in requirements around the globe. And what started as odd legal mandates in one or two countries has slowly grown to what seems like the standard operating procedure for the way countries are regulating invoice exchange. What is not standard, however, are the mandates themselves. So every country seems to have a completely different rollout of their e-invoicing requirements, different formats to use, different deadlines to track, and different penalties for non-compliance. And while we always hear about these scary, unspecified fines for non-compliance, we never really hear about what they actually look like in practice. So today we're hoping to shed some more light on this topic, and we'll walk through the rise of global e-invoicing and look at the penalties for some of the most immediate upcoming mandates. We'll also look at the steps we can take to avoid these fines so you can be prepared in the future. My name is Kenneth Taylor. I'm a business development manager at Comarch, and I am responsible for helping primarily North American companies that operate internationally and face these global requirements. Today, I'll be the moderator for this webinar. And before we get started, I just want to introduce the speakers joining me, two very smart minds in the world of e-invoicing compliance. First, we have Pavlo Boyko. He is a senior professional at TMF Group with 20 years experience in finance and tax process outsourcing under his belt. Pavlo has degrees in both economics and law, as well as an MBA from IE Business School, making him uniquely suited to help TMF Group's clients with their tax transformations as a global solutions architect. And next up, we have Joanna Dobrzyńska. She is a business solutions manager for Comarch E-Invoicing based in our New York City office. Joanna helps North American companies that operate globally and need to navigate the increasingly complex landscape of e-invoicing mandates. So she is a master in understanding the big picture of e-invoicing regulations around the world, and she can offer her perspective on the requirements of a wide array of countries. So thank you both very much for joining us today. I couldn't think of anyone better to join this very prescient webinar. So here's what we can expect for the webinar ahead. First, Joanna will take us through the current landscape of e-invoicing regulations around the world. And next, Pablo and Joanna will talk about the risks of non-compliance. And then I will walk through e-invoicing technology solutions that can help you comply with mandates we discuss. And finally, Joanna and Pablo will go through some practical tips that your company can follow to stay in compliance. And we'll wrap up the session with some common questions we get from our e-invoicing compliance clients. And feel free to ask any questions of your own in the chat. Any questions we can't get to, we will answer via email after the webinar. So without further ado, I will pass it off to Joanna, and she will take us through the global landscape of e-invoicing mandates.
Thank you very much, Kenny, for a very nice introduction. So before actually jumping directly into the topic of e-invoicing penalties, I would like to talk about the background of this global trend. So why is it booming right now? What are the reasons and what should we expect in the future? So the e-invoicing and e-reporting are triggered mostly by the governments. One of the key triggers, I would say, for invoicing mandates is a unified communication. So by having a structured, real-time view of tax information, we can reduce the possibility of a tax fraud. Basically, it is a way of combating the tax evasion by the governments. And from the business perspective, this is very helpful in terms of security and transparency of doing the business. Another trigger is automation. So thanks to invoicing, we can significantly reduce the chances of human error by eliminating manual tax reporting and have more accurate tax compliance. And probably the most important reason is that implementing invoicing mandates can result in increased revenue for the governments. So basically, by enhancing business tax compliance, they can boost the revenue, which can be used to fund some public services and infrastructure projects. In order to give you some statistics across the years, in the European Union only, for example, the VAT gap was estimated at, I would say, quite shocking number, because it was 137 billion euro in 2017, and Italy alone accounted for 24% of this gap. The countries with the largest gaps in terms of GDP percentage are Romania, Slovakia, and Greece, and you will see them on the invoicing roadmap, obviously. Similarly, in Latin America, that is the most mature continent in terms of invoicing implementation, the cost of tax non-compliance was estimated to 240 billion USD in 2015, and the average VAT evasion rate in this region is 27.8, with countries like Uruguay and Paraguay exceeding 30%. So considering all of this, invoicing mandates are rather a matter of asking when than if. The new invoicing regulations are set to affect over 65 countries in the B2G sector and over 70 countries in the B2B by 2028. So I think that it's very clear that the global trend towards invoicing is gaining its momentum, and it is crucial for businesses to adapt to these changes to remain compliant and competitive in the digital economy. Okay, and here we have a roadmap, a global roadmap that is showing the most recent regulations of invoicing in the world. So the most immediate implementations are planned in Germany, where interestingly, there will be no governmental platform for the private sector, and it will be rather a matter of having the right format. So Germany will use CN compliant formats that are approved by European Committee for Standards. So the name basically comes from European Committee, and this mandate will begin in stages, and it will start from 2025 with the obligation of only being able to receive CN compliant invoices until the necessity of sending them for larger companies with an annual turnover of more than 800,000 euro from 2027. Then we have mandates in France and Poland, which have been already postponed many times. And the mandates will be joined also by Spain with some local platforms across the whole country. We should also get ready for Belgium, Croatia, and UAE. And if you're interested in hearing more about the changes, you can always contact me directly via email, LinkedIn, or you can also sign up for our newsletter where we present the newest, the updates in terms of invoicing. And I would say that the general observation from this roadmap is that the center of changes in terms of invoicing that are happening right now are in Europe and in Asia. And we think that this might be influenced by VAT in a Digital Age Act announced by the European Union, which will support the digitalization of invoicing. And in terms of Asia, we are seeing that many countries in Asia are starting to implement PEPL that I will talk about it in a few seconds. Also, in terms of invoicing implementation mandates, we are seeing some universal rules. So basically, all the mandates start with B2G. So basically, all the companies or institutions that cooperate with the governments are being obliged to send invoices in a specific standard using, for example, PEPL. Then the mandate is being expanded to the private sector with a pilot that includes companies with the largest revenues and gradually involving smaller enterprises. For example, we are seeing this in Poland, in Germany, etc. And the latest regulations are those concerning, for example, retail sales when companies are obliged to report transactions made with the individuals. So we are talking here about B2C, so business to customer part. When it comes to the models in which invoicing is being implemented the mostly, they usually belong to the group of centralized transaction model, so C2C, where a tax authority-owned platform handles the whole exchange of invoicing between buyers and sellers. But as I've already mentioned, Germany is going to be an exception from this rule. So on this slide, we can see the most popular models that are being implemented in various countries. And starting from the centralized invoicing model with unique, let's say, platform, we have an example of Italy with their SDI platform that was introduced in 2019. And all invoices are processed and managed through this central platform. So basically, it allows for greater control and monitoring of invoices by the government. But on the other hand, it can also create some dependency on the central platform and limit the flexibility for businesses. We have also 3 or 4 corner model that is being used in countries like Mexico and Chile. And in these models, as the name says, in this model, there, let's say, involve multiple parties in the whole process of invoicing. That includes buyers, sellers, also government, and some financial institution that can process the invoices. Another model that we have here is real-time or near real-time reporting in the invoicing. So we have an example here as Hungary. So it involves the immediate or close to the real-time transmission of invoice data to tax authorities. Basically, this allows for real-time monitoring of financial transactions and can help prevent tax evasion. And the last one, already mentioned, PEPL. So this is an example of interoperability model, and its aim is to standardize invoicing processes and allow for seamless communication between different systems and platforms. So basically, it can make it easier for businesses to work with partners in different countries. And what is interesting is that PEPL primarily was created in the European Union for promoting invoicing between European countries, but the rules that were promoted by PEPL were so universal that many countries outside of European Union are using PEPL. So basically, PEPL was created on the European Union's directive about invoicing for business to government, and basically the directive had 2 main goals, which were creating a common format for electronic invoicing for the public and private suppliers that can work with public administration, and also the second goal was to improve cross-border trade between EU members. The exchange in the PEPL network happens between so-called PEPL access points that act as the middleman to transmit the documents between sender and receiver. And yeah, as I've mentioned, PEPL is used outside of European Union by countries like Japan, Australia, New Zealand, etc., in order to exchange the invoices with public authorities. And right now, I would like to pass my voice to Pavlo, who will speak a little bit about some risks and penalties for non-compliance.
Yeah, thanks, Joanna, and especially thank you for those four models explained in a very simple language. And funny enough, the motto, the slogan of our company is making a complex world simple. Very um, nice marrying up with how you described very complex concept of e-invoicing in very simple visuals of four models that you've presented. But before we deep dive into the risks, I just wanted to introduce very briefly, for those of you who do not know us, would like to introduce TMF. Joanna and Kenneth here represent technology provider, and if everyone is aware of that triad of people, process, and technology, then probably I represent the P and P, processes and people. So we're a global organization doing the compliance, accounting, and tax, including four other clients. We're 11,000 people strong, and everything that I'll be mentioning today is the wealth of knowledge coming from our local experts on the ground. So, John, you've mentioned 70 jurisdictions that will be implemented mandates in B2B world by 28. TMF is physically present with locally owned office in 86 jurisdictions, being able to cover that from people and process perspective. If you could go to the next slide, please. Again, talking about making complex world simple, complexity coming from the governments, from the tax authorities, is the main theme of our flagship publication, which is called GBCI, Global Business Complexity Index. Very nice read, I must say. Again, coming from our local experts on the ground, where we rank the countries in terms of complexity. If we go to the next slide, again, the themes, the topics from the GBCI, and you can see the list of the countries. For example, Greece is number one in terms of complexity. Go to the report and you will find why exactly Saudi Arabia appears in the report for the first time. Joanna will cover some of the penalties in Saudi Arabia and Latin America remains the most complex region in our report. By the way, e-invoicing has the longest history in that region, by the way. So in the next slide, you will see the themes of this GBCI, Global Business Complexity Index report. Investing safely, multinational risks, and strategies for success. And those three topics that are coming from the report are very, very similar to what we're going to discuss today with regard to e-invoicing. The problem definition, why exactly it's important, what might happen if a company is not compliant. So again, talking about the problem, and then towards the end, we will be talking about practical hints and about practical strategies and tactics on how to implement solutions to stay, Joanna, I'm quoting you once again, compliant and competitive. But enough with the introduction. It was meant just to provide some credibility to what we're going to discuss going forward, because again, it's coming from the people on the ground doing tax compliance, dealing with e-invoicing mandates in all those countries. You've just mentioned Hungary as an example. So I personally have been involved into the deals where the clients were looking into how to meet that obligation in Hungary, specifically to provide a copy of an invoice by the end of the same date to the tax authorities. So again, it's all coming from the ground. So the next slide, we will be talking about the types of risks. And again, the topic of today's presentation are penalties, but probably what is more important is to have a broader conversation to start with about potential risks. Risk by definition is something that might or might not happen. And with e-invoice mandate, it's probably a separate conversation that needs to be held. Talking about operational dimension of it. I believe it's very unique and it's very different from any other tax-driven compliance requirement. The e-invoicing mandates, if you're not compliant, you cannot bill your clients. As simple as that. So on operational level, this requirement, which is tax by nature, can impact your operations. It's out of the question, and it's probably a very good door opener for people outside of tax to explain and to prove why this topic is important. Again, no e-invoicing in place, no possibility to bill your client. So the operational dimension is very different from any other type of tax requirement where you would have a tax return populated at the end of the period, probably a long time after the period itself ended. Then you go through it, you verify, and then you submit to tax authorities. As Joanna has mentioned, it's different. There are many more data points, and the speed by when those data points need to land with the tax authorities are totally different. And again, operationally, it might impact your organization if you enter a new jurisdiction and you are not prepared from e-invoicing compliance perspective. Reputational is yet another dimension. We're seeing governments and tax offices getting more and more creative in that effort to fight tax evasion. So reducing VAT gap, tax gap, Joanna has mentioned, is one of the reasons to implement and roll out the invoicing requirements in those jurisdictions. But again, there are some other tools in the arsenal of tax offices. Chile, for example, not specifically for invoicing, for a different tax requirement, but they published the names of the companies that were not compliant on their website, and it got the attention of quite reputational newspapers, and many of the famous names were on that Hall of Fame list. So reputationally, again, if not compliant, it might hurt your organization. And last but not least, the very direct type of risk is the penalty or the late payment fees that might accrue and apply for non-compliance. This is a pure financial impact that directly might hit an organization that is not prepared to deal with the invoicing regulation. Joanna, back to you to go probably through a couple of countries and examples and how exactly those penalties might look like.
Exactly. Talking about financial penalties, so I have prepared some examples of countries that already have invoicing in place or that are preparing themselves for the invoicing rollouts. So, for example, in France, companies have been required to send invoices only to the public sector in electronic format since January 1st, 2020. And the obligation for B2B was postponed a few times, but it will finally go live from September 2026. And in France, there is going to be a very specific model because if the taxpayer connects directly to the governmental platform PPF, then this form of invoice exchange can be referred to as a centralized CTC model that I have already mentioned. However, if invoices are going to be exchanged through a certified supplier, PDP, it will be the centralized CTC model. And in terms of non-compliance with invoicing regulations, so they can result in penalties of starting from €15 per invoice with a yearly cap of €15,000, as well as penalties for e-reporting infractions. The next one, we have Saudi Arabia. So in Saudi Arabia, the Fatura invoicing program has been continuously expanding its scope since December 2021, with penalties for various invoicing and VAT-related violations. And penalties there depend on the number of offenses that can be served for those who fail to comply with the regulations set by Tax and Finance Ministry. And the range of financial penalties is between 1,000 and 40,000 Saudi riyal, and it depends on the number of time of not complying with invoicing rules. The next one, we have Malaysia. They have also implemented invoicing mandates for B2B sector quite recently. Actually, it happened in August 2024, so this year, and we are still in the pilot phase. The fines there for non-compliance are between 200 and 20,000 Malaysian ringgit, so it's between 50 and 5,000 USD dollar, or we can be also in prison, go to the prison, but only for 6 months. So this is very interesting. And yeah, next country we have Poland. So in Poland, invoicing is not yet mandatory, but the national system of invoices has been introduced as a voluntary solution since 2022. From February 2026, it will become mandatory for all companies with the revenue of over 200 million Polish zloty, and the second phase will be extended for the rest of taxpayers from April the same year. And the model in Poland will be centralized, and all invoices will have to be sent and cleared by the governmental platform XEF. In terms of penalties, so the penalties for non-compliance with invoicing regulations in Poland can result in fines of up to 100% of the tax indicated of the invoice, or up to 18.7% of the total amount due on the invoice. So basically, it is crucial for businesses to understand and really comply with invoicing mandates in order to avoid penalties and really ensure smooth operations within the regulatory framework, because non-compliance can result in the penalties and also, let's say, very severe disruptions in terms of business operations. And right now, I will pass my voice to my colleague, Kenny, who will present us some invoicing technology solutions that we can offer.
Yeah, thanks, Joanna. And as you could tell just from what Pavlo and Joanna are saying, like all these different regulations, I mean, they're enough to make your head spin. I'm sure if you've been working in it, you're familiar. And just what Joanna went through is just 4 examples. And there's many more countries out there that are introducing mandates that either have it now or there's mandates coming down the line. So considering all these mandates and the differing requirements, it's good to have 1 or 2 providers for a global approach to e-invoicing compliance. This way you're not dealing with a million different contacts and struggling to remember which company is responsible for which region. So that's where a company like Comarch will come in. In a few slides, I'm just going to show you how our e-invoicing technology and our approach helps our clients with e-invoicing compliance. So when it comes to international regulations and electronic invoicing, Comarch is no stranger to offering global support. So our solution is legally compliant in over 60 countries, and 650 million documents are exchanged every year on our platform. We have a team of legal experts monitoring the constantly evolving e-invoicing landscape, so we're able to stay ahead of new requirements and keep our clients informed on new mandates. And Comarch's holistic approach connects 130,000 different entities. So this includes clients, governments, and non-governmental organizations across 50 different countries. And this is, of course, all part of offering compliance in countries around the world, and another important factor for international compliance is, of course, multilingual support. So Comarch's service desk is available in 10 different languages, so we can support different international teams. So if you've got a team in Asia, for example, we've got people that speak, whether it's Thai or Malaysia or whichever. So it's important to also look for a truly global provider. So that means you're looking for a company like Comarch that can support different standards and formats across the globe. So this way, you're relying on just one provider across multiple countries. And for example, we offer connection with various government platforms. For example, Comarch was the first company authorized to send compliant invoices to the Thai government. Also, global organizations like GS1 are important, or PEPL. Comarch is also a PEPL access point. Sector-specific organizations, so there are some organizations specific to industries like the automotive industry, as well as global formats. So you want a company that can support different formats, whether it's the formats in Germany, the formats in Poland. Having one provider that can do all of these is really helpful for your approach. So Comarch acts as the connection between our clients and the various government portals. So whether inbound or outbound, we map the format required by the government to our client's internal format. So after this, we're able to automatically validate each invoice and make sure they meet all the government requirements. So any failed validations get returned to the client with information on how they should update their invoice so they can resend it and get it approved by the government. Some customers also ask for added fields that are not necessarily required by the government, but maybe, for example, are needed for the client's particular internal needs. This is called data enrichment, and it's something that we can also do as an optional service to expand the utility of the solution. Lastly, I would like to point out archiving, because that's another crucial point of government mandates. So every country, as we're learning, every country has these different requirements, and each country has different archiving periods. So Italy can be different from Poland, and they can require that you hold on to an invoice for a legally mandated amount of time. So Comarch can enable you to do that, whether it's how long you want to keep the invoice or you just want to keep it for as long as the government requires you. Comarch is able to do that on our own protected servers. But that is just a little bit about Comarch and similar technology companies that offer e-invoicing compliance and the approach that we take. So now I'll pass it off and we'll talk about some practical tips on how to maintain compliance.
So, yeah, in terms of compliance, some practical tips and also some challenges that companies have to, let's say, face when, let's say, planning the solution or in general, the strategy for invoicing and e-reporting. As we do this, we have to face numerous challenges that can make implementing these solutions quite a project, I would say. So from the complexity of the country solutions to the frequently changing requirements and moreover incomplete specifications, there are many challenges to overcome in order to ensure that we meet all regulatory obligations. So one of the major challenges we encounter is the requirement for compliance to be maintained in the local language of the country in which we operate. So this can be a significant barrier for businesses that do not have fluent speakers of the language, making it quite difficult to understand the regulations correctly, and very often countries that are implementing the invoicing are publishing all the regulations and specifications in their local language. What's more, very often the governments that are introducing the mandates do not have previously experience, and especially when it comes to the technical aspects of the solution that is going to be implemented by them. So the new governmental platforms that are popping up right now are technically immature, and it can be a quite challenge for internal systems to be integrated with them. That's why it's a good option to have middlemen that will, let's say, allow you to connect with the government via, for example, the API. And in addition to that, the ever-changing nature of requirements and the lack of proper communication from authorities can also create confusion and unfortunately lead to non-compliance. So it is crucial to stay informed and be quite proactive in monitoring the updates in order to adapt the systems accordingly. And lastly, I would say the challenge can be the overwhelming number of questions that are flooding at some point authorities, especially very close to the deadline. So basically, if we really start implementation late, we won't be able to receive the clarification. So even if we are trying very hard, we won't be able to, let's say, be compliant on time. And in order to sum up these challenges and ensure that we are meeting all regulatory requirements by trying to stay informed, also we should seek guidance when needed. We should monitor the updates, implement solutions in the upcoming mandates in the upcoming countries with, let's say, in a good time frame. And the good news is that all these, or the majority of these activities, can be done by solution providers and consulting companies like Comarch or TMF. Going a little bit deeper in terms of, let's say, what should be analyzed, like what part of, let's say, systems, infrastructure, or processes should be analyzed when we are doing invoicing implementation. We should definitely analyze our invoicing model. So the current processes that we are having in the company. Secondly, there are various legal aspects that must be taken into account. So this includes determining what data is required on the invoice, whether any additional documents are needed, and also we should ensure the compliance with all relevant regulations. And finally, there are a ton of technical requirements that need to be considered. And this really includes a lot of aspects like type of the interface that we will use, the format of the invoice. Also, if we are able to process e-signature, what are the archiving procedures that were mentioned by Kenny, the use of QR codes, automatic validation checks, and much more. And unfortunately, each of these technical requirements plays a really crucial role in the successful implementation of invoicing. And it also highlights the complexity of the analysis that is required. Now let's listen to Pavlo about also best practices that we can have when implementing invoicing and e-reporting in our organizations.
Thanks, Joanna. And this is quite a cryptic slide, so I would need your attention. You really would need to listen to it, because what you're seeing on the screen, sell, projectize, balance, and talk, probably doesn't give a lot of information off the bat. But look, in terms of sell, what do we mean by that? To start that project, to have the resources needed, and it's not a secret. We're all competing for some budget for a new initiative, for a new project. If you're a tax director or tax officer, obviously you're competing for some budget for some projects and technology and consultants, not just within the organization, not just within office of CFO, not just within tax department, but with larger organization as well. So to get there, to get the approval and green light and get some people from the top of your organization on your side and get the green light for a proper implementation, you need to apologies, sell that. You need to sell that project for implementation of e-invoicing solution. And again, you attending this seminar is part of the solution. Joanna, you've mentioned jail time in Malaysia, 6 months or whatever is the time to serve, doesn't matter. The moment you approach that and you mentioned jail time as a
Yeah.
potential risk personally for those involved, that helps you to build your business case. Again, what we've covered previously, operational, reputational level, and financial penalties with the examples that John have provided. That's exactly what should go into the business case. You could try and monetize that and present that to the board to get approval to move forward. In terms of the project itself, it's projectized. Please make that as a project. Tax people historically are probably not very much accustomed. It's not in their DNA to deal with project. Most of the activities are repetitive. If you take compliance, if you take month in, month out VAT report or GST or whatever is the deliverable, it's probably repetitive activity. Project is something different. And again, we're living in the world where invoicing requirements, SAFTI, standard audit file for tax, with very similar transactional level type of information demanded by tax authorities, with the new perspective of tax authorities on the touch points between tax office and taxpayers. It's all evolves into more and more projects being undertaken by tax directors and tax teams. And by the way, there is, as a proof to that, there is the first ever official diploma in tax technology. Feel free to reach out to me. I can share some details, but that's a signal that the profile of a tax professional is changing. It's more about interaction with technology, with data points, rather than pure functional knowledge of tax legislation. And having e-invoicing approached as a project with the budget, with the deliverables, with the milestone, with a dedicated project manager, with steer committee, what have you for a project will absolutely help, because that's a change. And it takes a project to deliver that change within the organization. Balance, yet another one. It's very well known. Virtue is a middle point between two evils. We've seen one side, one extreme, doing nothing will bring you all sort of risks materializing from reputational, financial, jail time, even what have you. But there is another extreme, taking that absolutely to the point, waiting, investing lots of time in planning and postponing, waiting for ideal solution covering all the countries in the same time, taking a very rigid approach and spending more time on preparation rather than in implementation itself. It's always a balance between speed and what you want to have there. You need to be flexible in that project. If you automate 80% and you have long tail countries with lesser presence where you outsource e-invoicing as a short-term solution, happy days. That's also an option. So again, you would need to balance as a project owner or as a team member participating in that implementation project on how to approach that and where to find that golden middle type of balance. And talk. As any change project, as any change implemented, it requires lots of communication. From that cell perspective, where you need to alert the peers, the management leadership of your company why you're doing that. Similarly, throughout the implementation and even after the project is finalized, you need to update on KPIs. During the project implementation, you have some objectives. Have you achieved those? What are the KPIs? What's next in line? For those people who are dealing with the invoicing, issuing them, billing department, for example, implementing an automated solution is also a change. So talk to them as well. Make sure that you update those that are closely involved and impacted by this change, that you inform them on regular basis on where you stand, what has been achieved. Kenneth, you mentioned at the very beginning the big picture. So talking through that big picture and why a specific project, a specific implementation is put forward. What's are you trying to achieve as a tax organization or as finance organization or as organization as such through that implementation is extremely important, and probably there is never too much communication in terms of how it goes in terms of implementation. So those would be the practical steps and best practices. We've dedicated quite some time to problem definition. You've heard from Joanna on challenges, multilingual support, technical complexities, differences in local flavors of e-invoicing, what have you. But with those actions, hopefully, this will make your journey less bumpy. Joanna, back to you.
Thank you.
Well, Pavlo and Joanna, that was great. I really appreciate your insights, and I think people are going to find this super helpful because it's nice to put these mandates into perspective. We hear about them all the time, but we don't really know what's behind them. We don't really know how to plan for them. So listening to you guys, the experts, is super helpful. And that brings us to the Q&A portion of the webinar. I think I'm going to start with some questions that we get frequently from our clients and people that are looking to comply with mandates. Pavlo, I think I'll start with you, and Joanna, feel free to chime in if you'd like, but I'd like to get your perspective, Pavlo. What are the most important practical steps, would you say, to start preparations for e-invoicing compliance?
Right. The question has the practical in itself, so the word practical is probably something different. I will start with a fairy tale, right? So every fairy tale, if you look at the story, if you look at the structure of that, obviously there is the hero, yourself, there is an adventure and problem statement. We've been through that, so we've discussed the risks, we've discussed the financial penalties, what might be the impact, including the jail time, and so on and so forth. So that's an adventure. But what is present in every fairy tale is a team, friends. So to me, the practical step, which is probably the most important, is to make those friends, to make that team. Because it takes a village to do such a project, right? And again, talking absolutely practically, attend the webinars like today, and the fact that you're doing that is already very telling. So make sure that professionals are on your side because they know the nitty-gritty details of that. Joanna has mentioned the legislation is in local language, the requirements are in local language, so companies like Comarch and TMF, we do have local presence, we're certified in Comarch's case, and so on and so forth, so we know the details. So make sure that you have the vendors for technology and consultants on your side, but probably even more importantly, your organization. That will be a project, and make sure that IT knows about your plans, that the rest of finance organization, not just tax department, but the rest of finance organization, especially treasury, especially billing department, CFO themselves, they know about what's coming and why that is important. So make friends.
Yeah, exactly. So the three musketeers, to borrow from your analogy, we've got TMF, we got Comarch, and we have the client.
Absolutely.
And I think, Joanna, this question can be for you. What is the recommended amount of time to prepare for an upcoming mandate? So I guess, for example, if you see that, I'll use Germany as an example, since that's an upcoming mandate. When should a company plan ahead? How early should they plan ahead?
Yeah, so it depends really on the mandate, and it really depends on the complexity of the organization we are working in. And yeah, but like trying to give you like one answer, I would say that we should really start preparing ourselves for the mandate at least 6 to 12 months in advance to simply allow for sufficient time to assess your current invoicing processes, select invoicing solution, also implement the necessary changes, if any, because we have to take into consideration that even there is like a mandate in place, the governments are very often changing the way of sending the invoice, adding some tokens, generating QR codes, after that, switching that to something else. Yeah, we should also train the staff because one thing is like to implement it, right? And the second one is like to learn to really use it. And yeah, I will say that it is very important to start early to avoid any last minute issues or disruptions on your invoicing operations. And also we have to really think about the time of the response for our questions from the governments, right? So if we are starting to test the platform, our solution, etc. So very often we will have some questions, right, that we should probably send or somehow deliver to the governmental institutions and receive the answer from them. And we have to bear in mind that when the go live is approaching quickly, then there is really no time to, let's say, receive good answers or to adjust something. So yeah.
Yeah. So in other words, plan ahead.
Exactly.
And from experience, the government is going to work at their own pace. So as much planning as you can do, it's going to come down to government response time. Sometimes some governments are less responsive than others, especially if they're still very early in their mandate. So just remember to have patience as well. I don't know, Pavlo, did you have anything to add, or did Joanna put that well?
It's absolutely what we're seeing.
Yeah. And I
Plan
think
ahead.
I'm sorry, what?
Yeah, plan ahead.
Yeah.
That's a good
Yeah.
summary.
And I think we'll wrap it up with this last question. And either you could take this one, Pablo, maybe you could start. What are some things to consider when choosing an e-invoicing solution provider?
Well, from my perspective, it is geographical coverage. Absolutely.
Mm-hmm.
That is probably one of the most important things that we start the conversation about technology. Joanna?
Yeah. So I would say that also maybe. Sorry, can you repeat the question?
Yeah. What are some things to look
okay.
for when choosing a provider?
Geographical coverage, that the first one. We should also probably ask for like very practical questions, like if the company is ready to prepare some mappings between our internal system and the governmental required, let's say, formats. If the company is delivering you a project manager, because not all the providers are doing that. And yeah, I think that also the practical experience and the coverage in terms of other projects and clients in a specific jurisdiction, that would be also very useful. So the provider can share some good practices that they gained in the market through the years of experience they might have there. And I'm trying to think about something else I would focus on. And yeah, maybe also local support, because a lot of companies are claiming that they cover the market, but after that it results that they work through some third parties. and they are not, let's say, able to support you in the local language, or they are not able to help you with the interpretation of some updates in the mandate or some changes. So I would say, like, yeah.
And just to add one little remark, just to add to that, the spirit of partnership, right? It's a multi-country engagement, be it about outsourcing those services or be it about implementing the technology. Joanna, you've mentioned that promising and then following through is critical. So to me, these type of project, these type of arrangement, preparation for e-invoicing, it takes time. You've mentioned that companies need to be prepared. So whatever is the relationship you're having, be it technology vendor or consultant, there needs to be a spirit of partnership. There needs to be that trust between the parties and willingness to follow through what you've committed to. This is absolutely important.
Yeah, all great advice. And so Pavlo, Joanna, I really appreciate you joining and giving your insight. I know I keep saying this, but there's so many mandates that it's always wild to me that you guys can, keep track of everything. It makes my head spin, but you guys really clearly know your stuff. So thank you so much for joining us, and thank you to everybody who tuned in. I hope you found it helpful. If we didn't get to your question, we can answer it after via email. And please feel free to contact any of us via LinkedIn or email. We're here to help. So thank you very much, and have a great rest of your week.
Thank you. Bye-bye.